Good afternoon, everybody. It's the end of June, and I wanted to talk a little bit about some things that are happening economically globally, the national real estate market, and the local real estate market. Let's start with what's happening globally that might affect what you're experiencing through trickle down locally. First, we've got trade tensions and tariffs globally. These tariffs are affecting the cost of goods that we bring into the country, which are affecting the prices that you pay. You probably see that now, right? That's also, of course, affecting inflation. Every video I typically try and talk about the inflation rate. Many of you may recall the target inflation rate that the Fed has given us is 2%. Right now, we're at the last count at 2.4%. So very, very close, you might see on paper. But again, if you're buying gas, if you're going out and eating, if you're looking for housing, or even trying to purchase a vehicle, you might notice that inflation continues to be very, very real and a very, very significant part of people's lives right now. And then finally, globally, one of the things that's going on that's trickling down and affecting us is geopolitical risk and oil, which is affecting gas prices, or it will potentially shortly affect gas prices, so the price you pay at the pump. That, of course, is the U.S. directly involved with countries in the Middle East, and one of those countries can have a control over the flow of oil out of the area, which can affect production, and it can affect how much we're going to end up paying at the pump. So this globally is what we're seeing. And then let's wind that down a little bit to the US, the national housing market. So for the first time since about 2008, we're seeing the real estate market shifting from being a seller's market to being a buyer's market for the first time. We now have sellers outnumbering buyers by over 500,000 homes, which is the largest imbalance we've seen since the great financial crisis of 2008. Inventory is up 34% more than active offers, and homes are sitting longer. 61% of US markets are now seeing prices decline. Let me repeat that. 61% of US markets, housing markets, are now seeing prices decline. Of course, are we seeing prices decline here in the triangle? We'll get to that in just a second. What's causing the shift? Well, pandemic-era buying frenzy that led a lot of people to lock in 3% mortgage rate is freezing up a lot of that inventory, where of course now we know that the interest rates are closer to 7%, which is in effect at least doubling the price of a mortgage or the mortgage payments for a lot of people. So a lot of that inventory is held back as people are reluctant to sell their homes. What's happening in 2025? Well, inventory is rising, up nearly 30% year on year, with 81 consecutive weeks of gains. Sellers are listing again. What's that driven by? Well, life changes. Job changes, family changes, divorce, desire to cash out equity, fear of peaking prices, and diversifying into other assets. Buyer power is also growing. This is why it's becoming a buyer's market. Homes are now on the market on average 50 days versus 33 days just a couple of years ago. Only 28% of homes are selling above asking price, and canceled deals and buyer hesitation is rising. Also, builder tactics. Developers aren't lowering prices, they're buying down interest rates. So if you look specifically at some of the new construction houses, even here in the triangle, you still see considerably higher prices that aren't dropping, even though a lot of those properties are sitting. But what you are seeing is really low interest rates. And at the end of the day, whether the buyer has the ability to take off, let's say, $20,000 off the price of the house, or they could give you a interest rate to buy the house. Instead of at 7, they give it to you at, let's say, 5.25. Over time, those two might net out to about the same money, And for a lot of people, the ability to get a lower interest rate like a 5.25% from a builder is more desirable than just getting $20,000 off the price of the house. Let's talk a little bit about condos. This is nationally now. We're seeing what many are calling a quiet collapse of the condo. 83% more listings in condos than offers. What are some of the reasons? Well, skyrocketing HOA fees, resale restrictions, and poor appreciation makes them cheap to buy but hard to sell. Florida has probably been one of the greatest examples many of us have seen. The beach city condo communities where the HOA fees have gone way up due to a lot of the safety measures that have been put in place, and insurance skyrocketing on these properties, in a lot of cases doubling. Some of these condo owners, many of them on fixed income, have monthly payments that have gotten unaffordable, so they're looking to sell, and there's so many condos on the market for sale in places like South Florida right now that the days on market just continue to linger and linger. So I think this may be kind of some of the early stages of what we're seeing in the housing market. And then regional price drops. Austin, Texas, very, very popular place to live. Very common for people from the West Coast, California specifically. There was a big influx of people moving to Austin, Texas. They're down. Their regional price drops are down 21% from peak, and then places like Oakland down 19%. Let's talk a little bit about the triangle market. Locally, while we might be seeing a few early signs of this national trend, the triangle remains relatively resilient. For buyers, more homes are sitting on the market, especially in suburban areas. Builders are offering incentives like rate buy-downs and closing cost payments. Prices aren't collapsing, but we're seeing a little bit more room to negotiate, particularly on homes that have been listed over 30 days. And then inventory continues to climb, especially in Wake and Durham counties, which gives buyers more options than they've had in previous years. It's still a strong market, but the days of multiple offers in 48 hours are absolutely fading. Pricing your property right is crucial to selling the property. Homes that are turnkey, staged, and priced to market still are moving very, very quickly, while overpriced homes are getting stale and are requiring price cuts. Let's talk a little bit about the triangle rental market. First of all, demand remains strong, especially in central Raleigh, Cary, and Durham. Rental prices have plateaued after years of sharp increases. However, we're starting to see longer days on market, particularly for older or poorly maintained rentals, units priced at the top of the market. Renters are more price sensitive and selective than they were even a year ago. A message for landlords: it's still a great long-term market, but expect a little bit higher turnover. You may need to offer move-in specials or flexible terms, and you really need to keep your properties well maintained. Condition matters more than ever before. Let me talk to investors right now. Opportunities still exist with softening prices and steady rental demand. Cash flow is still viable in many zip codes, especially with creative financing or accessory dwelling units, ADUs. Consider long-term holds with fixed rate financing. And if you're trying for Airbnb, look at the specific areas that you're buying in. There are a lot of areas that are very saturated, so you may not get the vacancy fills that you're looking for, but certainly a very real possibility in certain areas, certain neighborhoods specifically. What this means for you. Nationally, the market is flattening, it's not crashing. Locally, we're seeing a more balanced triangle market. If you're a buyer, you finally have some leverage. Gone are the days of having to bid with a lot of other people. Gone are the days of having to waive contingencies or inspections. You can actually shop for a property that fits your needs. And if you're a seller, you have to be strategic and you have to be realistic. It's still a great market to sell a property in. You just have to put more time and effort and work with your real estate agent to make sure that you are positioning the property well to sell. Renters and landlords, expect a little more negotiation than you've seen in the past. Expect a little bit slower movement, but the underlying rental demand does remain solid. Overall, it's a healthier market for both parties than it has been in years, where there's a good balance that people that are looking to buy or sell with the right planning, the right research, and working with the right professional, you absolutely can find success in what you're looking for.